When an enterprise generates an invoice, the formatted PDF sent to the customer is the final layer of a much deeper process. Within the database, the invoicing document acts as a structural anchor, where raw usage data is converted into audited financial records. Modern enterprise billing is chaotic. Telecommunications companies, utilities, and subscription services generate millions of raw, disparate consumption events every hour. To translate that scale of activity into audited financial reality, you need an integration nexus. In SAP Billing and Revenue Innovation Management, that nexus is the Convergent Invoicing Document. Its true function is to aggregate upstream consumption data and immediately trigger downstream accounting entries. This diagram shows the exact position of convergent invoicing. It sits directly between multiple billing streams on the left and the FICA subledger on the right. Here, the CI component immediately outputs to contract accounting and ultimately the general ledger. Managing this high-volume integration requires a modular internal structure. To handle these disparate inputs and outputs, the CI document is strictly compartmentalized into 5 distinct elements. We can map this architecture by tracing a single monthly billing cycle. Let's look at a hypothetical provider, Telcom1, processing data for a customer named Bovi. The system isolates different data types into these specific segments to ensure that every final dollar on the balance sheet can be traced back to the specific megabyte of data consumed. Bovi's monthly cycle has closed, and Telcom1 needs to process his usage. Upstream systems have recorded 2 distinct events throughout the month: Document 1001 for a $90 data rate and Document 1002 for $50 of voice usage. During the invoicing run, the system scans the database, identifies these independent billing records, and groups them into a single invoicing unit for Bovi. This creates the first structural element of our invoice, source documents. This permanent traceability link stores the exact IDs of upstream records, like INVI or VBRK. Therefore, an auditor can navigate directly from the invoicing document back to the original billing systems to inspect the raw consumption data. Upstream integration is secured. The consumption data cannot be orphaned, and the system knows exactly what it is billing for. With the sources grouped, the system generates the actual CI document, assigning it a unique identifier, like document 40001093. This is built around a core record. This interface shows the standard SAP GUI view, where a billing consultant interacts with that core record. Element 2 is the document header. It stores the high-level administrative and routing logic, including the specific business partner, BOVO2, and the contract account. The header also contains the financial summary. For Bovi, that's a total gross amount of $166.60, along with the precise document and posting dates. Crucially, the header stores the reconciliation key. The system requires this specific key later to transfer these summarized totals out of the subledger and into the general ledger. Element 3 is the items. This segment breaks the header's total amount down into print-level granular rows. Looking at Bovi's line items, we see the specific breakdown: the $90 data charge, the $50 voice charge, and the $26.60 in calculated output tax. By separating the header's routing logic from the line item details, the architecture provides a clean interface for billing inquiries and print formatting, completely isolated from the raw usage data. All of this data structuring is useful, but in SAP BRIM, an invoice is financially meaningless until it hits the ledger. That requires element 4, the posting documents. During the run, the invoicing function automatically derives the required accounting entries and creates one or more posting documents directly in the FICA subledger. This establishes a one-to-one, or sometimes one-to-many, relational linkage between the central CI document and the resulting financial records. For our telecom scenario, the invoicing document points directly to a newly generated FICA document, say number 140520. If we open the THICA structure, we find the specific database tables involved: the document header, the business partner envam, and the general ledger item. This is where the actual accounting logic executes. The system posts a debit of $166.60 to the receivables account. It then posts the offsetting entries: a $140 credit to telecom revenue and a $26.60 credit to the tax GL. The posting documents element is the critical compliance bridge. It ensures that the exact totals presented on the customer's invoice perfectly match the downstream financial subledger. But transactions do not always end there. Suppose Bovie calls to contest a charge, and the agent determines the invoice needs to be voided. In SAP Enterprise Accounting, there is a strict compliance rule. Once a financial record is posted to the database, it is never deleted. To manage this, the system relies on Element 5, reversal data. Instead of deleting the record, the system creates a brand new document, a reversal invoicing document, which is an exact negative copy of the original. The original invoice then updates its processing mode to reversed and stores a definitive pointer to this new reversal document. Under the hood, the system executes a technical shift in the origin keys, for example, changing from 77 to 78. This permanently flags the document's reversed status for any future database queries. The reversal data element guarantees historical accuracy. External auditors can view the complete lifecycle state of the transaction without ever encountering a missing record. We can now see the complete architecture of the Convergent Invoicing document. Element 1, Source Documents, maintains the upstream integration. Elements 2 and 3, the header and items, manage the presentation and routing logic. Element 4, Posting Documents, secures downstream financial integrity. And Element 5, Reversal Data, locks in historical accuracy. Together, they form a closed-loop system, cleanly transforming raw, chaotic usage data into rigorous accounting entries. This strict compartmentalized architecture allows SAP BRIM to scale indefinitely, maintaining order for both the customer's monthly bill and the corporate ledger.